Welcome, ladies and gentlemen, to another online TV interview series at Commodity TV. And now we are going to Johannesburg, to South Africa, and we want to talk to James Wellsted from Sibanye-Stillwater. James, good morning. How are you?
Morning, Jochen. How are you? And morning to your viewers.
Thank you very much for taking the time. I know it's a very, very busy time for you guys. You just released your quarterly numbers and also your half-year numbers. And I think we should discuss some of that, because I think one of the biggest highlights for me is that you start to pay a dividend.
Yes, Jochen, yeah, I mean, it's been quite an interesting period for us. Starting the year, we started very strongly. Operationally, our operations were all stable and performing very well after a couple of years of disruption, as you know, due to strikes and other things. And we also had the tailwind of very good commodity prices, PGM prices. Gold was a little bit lower than it is now, but PGM prices were quite strong. So the first quarter was very good. And then obviously the momentum was interrupted a bit by COVID and the lockdowns that happened, particularly in South Africa, which had quite a big impact on our operations in the second quarter. So the second quarter was a little bit difficult, but I think we've managed to work our way through it quite well. We're now almost back at full production again. And overall, the PGM basket prices held up. In fact, we're back at almost $14,000 per ounce rhodium, $2,300 per ounce palladium. Gold price is very strong. We have record gold price levels in South Africa in rand terms. So the outlook for the second half of this year is very, very solid, with an improvement in the operations expected, and then obviously still strong prices. So because of that, all of those factors, we delivered a record financial performance for the group in the first 6 months of the year. And because of the positive outlook, we felt confident enough to be able to declare a dividend for the period.
Yeah, which I highly appreciate, as I'm a shareholder long-term with you. And yeah, I love to see that. Now we are talking about a 1% yield approximately. I remember from former interviews, which we did the last years. And if I look at the history of Sibanye, you always wanted to have like a 5% dividend yield. Is this something you want to achieve, let's say, within the next 9 to 12 months?
Yes, I mean, our focus is definitely on being an industry-leading dividend payer. Our policy at the moment is at least 25 to 35% of normalized earnings, which is operational type earnings, stripping out all of the once-offs and non-cash items. So the dividend that we announced, which was 50 cents in South African cents, it's still got to be converted into dollars on the 21st of September. But effectively, it was only 15% of our normalized earnings. So it is quite a bit lower than what we would normally pay. But given the still in August, when the dividend was declared, the still relative uncertainties around COVID and second wave potentially coming through, the board decided that it was prudent to rather declare a smaller dividend now, and then they will review the dividend in light of the full year earnings again at the end of the year. So there could be quite a substantial dividend coming at the end of the year.
Fantastic, which I really appreciate, because I'm also risk averse, and I think it's always important to really play the risk down, and if everything goes well, then open the wallet. What I found also interesting when I look at your numbers here, I mean, you had like if we compare that with June 2020, the gold price you have achieved was $1,613 per ounce. Now we know we are very close to 2,000. I think the average of this quarter is probably closer to 1,900. Also, I think you had no restrictions in production. So would that mean that this quarter would be a real record quarter, meaning in earnings, in production, and also, let's say, in profits? And given that fact, I know it's a long question, but it's important because I think it's in a nice relation. You have brought down your net debt significantly. So would that mean that by the end of the year you maybe would have no debt?
Yeah, there's a good possibility. I mean, this current quarter, we in the third quarter of the year, the September quarter, is still affected by COVID, because as a country, or industry in South Africa, we were allowed to build up production from 50% in May up to an optimal levels from the beginning of June. because of having to bring people back from other countries and neighboring provinces. We've done it in quite a gradual fashion. So we're only now at about 90% of capacity. So the third quarter will still be impacted, but the fourth quarter will be virtually normal. And with higher prices, as you mentioned, the dollar gold price is good, but in rand terms, with rand weakness, we're actually having record rand prices, which are almost 20%, 15 to 20% higher than what you just mentioned for the first half of the year. And the PGM basket price is also currently sitting at record prices in rand terms. So the outlook for the second half of the year is for a better operational performance, probably a 30 to 40% improvement in gold production and about a 15% improvement in PGM production, but then also supported by even higher PGM and gold prices. So, our record financial performance from the first half of the year is likely to be better in the second half of the year if things continue the way they are. And as you said, our gearing or our debt, which previously had been perceived as quite high by the market and part of the reason for the discount that we've been trading at, we've substantially reduced that. In the beginning of 2020, we were sitting at about 1.25 times. By the end of June, we had 0.55 times net debt to, or adjusted net debt to, net debt to adjusted EBITDA. We have got an upcoming convertible bond that can be called from 17th of October. And as of June, the value of that convertible bond was about 9 billion rand, which is more than half of our net debt. So by exercising that soft call, our debt would drop by more than half, and we would go to about a 0.2 net debt to adjusted EBITDA level.
Now, which
so
is
that
like
would
nothing.
be back to debt levels that we had before we started growing in the PGM space. So really, in 3 years, we've gone back to a very, very strong balance sheet again.
Fantastic. Let's put it that way. What would be the dilution out of that convertible bond?
So we'll issue about 248 million shares, if we call it, and that would result in about just over 8% dilution.
So that's, I would say that's quite a fair amount for getting down the debt almost to zero.
No, and it's something, we put this convertible in place in 2017 when we were financing the Stillwater transaction. So we've been aware that it's coming. It's almost a capital raise event for us, in order to bring our debt down.
Yeah, absolutely. Stillwater is a good word to be named here as a headline. So how is it going in the US? How is the PGM business going there? And also your recycling business?
So Stillwater, the US operations have been invaluable to us. Through this COVID period, the US operations have basically been able to operate uninterrupted. In the US, PGMs were declared an essential product because of their use in a lot of medicines and medical products, and then also in the oil refining industry as a catalyst. So we were able to continue operating. The only thing that we had to do was to reduce the amount of people on site in order to achieve social distancing requirements. So what was done was that certain growth capital at Blitz was suspended, which resulted in us demobilizing contract employees and reducing the workforce by about 30%. And that will have an impact on the buildup of the Blitz project. It will push it out to maybe 12 to 18 months, by about 12 to 18 months to 2023. But what it did achieve is that the US operations were able to continue producing through the COVID period when our South African operations were shut down, and provided a very, very substantial financial and operational support base there. The recycling as well has continued. Before the lockdown in early March, the global lockdown, there were a lot of deliveries of auto catalysts to the recycling business. So we went up to about 900 tons of auto catalyst material, which we subsequently processed during the lockdown period. We're down to about 150 to 200 tons now, which is a normal kind of level. And
sorry, this is per day, the tons?
Or? No, overall inventory. So we process about 23 tons a day through the recycling process. But there was quite a substantial disruption of global recycling collections, scrapping of cars, etc. So we expect recycling overall globally to be down about 15% this year. And it's largely through the last couple of months. We have seen an improvement in deliveries since the restrictions on COVID are starting to be lifted a bit.
Okay, fantastic. Can you please comment on the Lonmin integration with Marikana and all those kind of things? How's it going there?
It's going extremely well. As you know, we acquired Lonmin in June last year, eventually. And we started with the review process, and then following that review, we entered into a restructuring. We closed 3 of the older shafts, which are at the end of their lives, and restructured the workforce accordingly. And initially we anticipated about 730 million rand of synergies from integrating Lonmin. We now believe that we'll get about 1.8 billion rand, so more than double by the end of this year. So it's gone very, very well. In fact, we've already repaid the Lonmin acquisition within a year of acquiring it from cash flows from that business.
Wow, that is outstanding. Congratulations on that again. Super. I think you guys are doing a great job with the whole team here. Also, I saw in your press release that you spent like 1.6 billion rand into COVID-19 social relief efforts. I think this is also something really important to mention, because mining is a lot of times in the critics that it's not taking care of the people and it's just exploiting nature and hurting the environment. But I think you guys are going a real different way here.
Yeah, I think, we realized obviously the lockdown in South Africa was across industries. So nobody could work, there was no economic activity at all. We are aware that a lot of our employees obviously needed some financial support. So 1.5 billion of that 1.6 billion was in financial support that we provided to non-working employees through that period. Obviously, people who worked got paid normal wages. So that was for people who weren't able to work. And then we did numerous things for communities and for government in order to alleviate the pressure on the local government and national government. We converted a lot of our hospitals to quarantine facilities. Over 2,000 beds were available for quarantine and isolation purposes. And we provided a lot of sanitizer and personal protection equipment like masks and sanitizing and cleaning equipment, etc., to communities, as well as food parcels and other support. So it was a big effort extending from the bottom all the way up, with even our board and our executives donating a third of their salaries for over 3 months into the National Relief Fund, as well as other contributions that we made to National Relief Fund. So we've tried to be a good corporate citizen, and I think our assistance has been very well received within the communities that surround our operations.
Yeah, I would really imagine that too. So you have only friends with the workers now, because I think to help people when they are in an emergency case, this is the best what you could do. Well, James, that looks all really fantastic. I think we are talking quite soon then about the Q3, of course. And let's keep fingers crossed that gold, silver, platinum, palladium, etc., everything is holding up and probably going much, much higher. And yeah, I look forward to my dividend payment received now, to receive now by the end of the month, I think it is. And yeah, look forward on the dividend increase and talk soon to you. Thank you very much.
Thank you, Jochen, and thanks to everyone watching. Thank you.
Thank you. Yeah, ladies and gentlemen, that was James Wellsted from Sibanye-Stillwater, and you heard it. Despite disruptions of COVID-19 and despite that they couldn't produce fully, but still the second quarter was a good quarter, and they are doing an extremely good job. Even they are starting to pay now a dividend, which we highly appreciate, and the debt levels are going down significantly. And as James alluded to, probably after the exercise of the convertible bond, the debt ratio ratio goes down to 0.2 only net to EBITDA. This is outstanding. Those are the levels before they started their really aggressive expansion program for the company, which made Sibanye-Stillwater what it is today. And I think this company is a great cash machine. Everything is in good shape, but also they do not forget their social responsibility, which we also highly appreciate, because you have to look after your employees, you have to look after your communities, and you have to play it right. And I think all stakeholders are really happy, the employees are happy, and it's a good overcome to the crisis we saw here worldwide. Yeah, we look forward to the Q3 numbers, and also we will set up quite soon here a virtual roadshow, which will be on the 6th October. We are defining the time, so look forward on that when James or even Neil Frohman then will present on that. Yeah, I wish you all the best. Thank you very much for watching us, and bye-bye from Switzerland, and bye-bye to South Africa. Thanks.
Thank you, and bye-bye.